Good morning. Welcome to our E3 Weekly Market Report. I'm Pat McClatchy. Welcome to this report. We're doing this on the 6th of August. We'll be looking at exports that are just now scrolling across the screen, and we'll break those down. Then we'll be looking at some changes that have taken place in commodities in recent weeks. We'll also cover the seasonals and markets that we follow, and then we'll look at some forecasts. Right now, looking at the markets, the cotton number that has just come out for exports, actually a negative number, a negative 14,200 running bales for old crop, down noticeably from the previous week and from the 4-week average. Indonesia took about 2,500 bales. El Salvador, let's see. El Salvador took a small amount. Well, everyone's taking small. Philippines taking 400 bales. Let's look at the decreases. Cancellations came from Turkey, 10,300. Pakistan canceled 4,500, and Hong Kong canceled 1,600. Then we've got net sales for new crop, 123,900. That's excellent. The breakdown is Turkey took 46,200. Honduras took 15,600, and Mexico took 13,100. As the number came out, the market was down 36. Right now, the market's down 37. Has not really reacted yet. Soybeans, cancellations also. A net negative number. This is very large, 447,300. And that number is a marketing year low. Obviously down noticeably from the 4-week average. Japan took 59,800. Nigeria took 15,000. Colombia took 8,100. Cancellations were China. They canceled an even 500,000 metric tons. And there were other cancellations from unknown destinations and from Panama. Looking at new crop sales, well, a very big number. Net sales of 1,024,000 metric tons, reported primarily to unknown destinations, 489,500. China took 426,000, and Taiwan took 79,300. We can only guess that China is simply rolling old crop to new crop. Reaction of the market, soybeans were down 3 at the time this came out. Now soybeans are down 5. Corn. Wow. Everything's a reduction. A cancellation of 2,700, marketing year low. And the breakdown shows Mexico took 129,300. South Korea took 72,700. Venezuela took 58,000. And we've got unknown destinations, cancellations of 228,000. Taiwan canceled 126,700. The sales for new crop in corn, we've got 277,000 metric tons. Unknown destination took 131,300. Mexico took 105,300. Colombia took 30,500. And reaction in the corn. Corn was up 1.5 pennies before this came out. Right now, corn is down 1/4. Looking at wheat, net sales of 838,500. That is a positive number. The only market we follow that's got a positive number today. That's a marketing year high. That's up 20% from the previous week and 82% over the 4-week average. We've got unknown destinations taking 394,600. The Dominican Republic taking 81,000, and Japan taking 71,000. And reaction, wheat was, before this came out, wheat was up 5 3/4. Right now, wheat's up 6. So slightly positive reaction. We seem to be coming under pressure now. I see the soybean market is down 7. Corn is still unchanged, and cotton's down 42. So cancellations, some of which are rolling into new crop, but market is reacting in a negative way. We also have had jobless claims coming out just in the last few minutes. They rise to 270,000 on that number. Let's talk about some other things in the market. There's been a change over recent weeks in commodities. The general perception is globally among investors that commodities possibly are not the place to have money that they once thought that it was, that the commodities were considered among large funds as a place to hedge against inflation and diversify portfolios. A series of events have happened over the last month that have really sort of changed some of the perception. We'll talk about that. Really a combination of global events. Everyone's aware of it, but the settling of the Greek debt crisis, the Iranian nuclear treaty, the Fed giving every sign and signal that they plan on raising rates, and also the Chinese meltdown in their stock market. Those things combined have really started putting downward pressure on commodity prices. And as I said, we're seeing funds sell. We have two types of funds. We have index funds. The large funds are basically rebalancing portfolios and it seemed to be reducing the size of their long holdings. Then we've got hedge funds that actually can get short the market, and they have been getting short the commodities markets. I think especially the crude oil could be moving lower with overproduction. The dollar could be moving higher, and that combination should help put downward pressure on most commodities. You know, I made a note here on some of what I've seen some analysts saying about the possibilities looking forward into the future about just how low can these markets go. And these are some of the numbers I've seen. The cotton market could drop into the area of 58 to 60. That's about an 8% drop. We could look at soybeans, corn, and wheat all possibly dropping as much as 7% in value. Crude oil, bigger drop, the possibility of a 20 to 22% drop. Gold, another drop around 20% or maybe even more. CRB could drop about 19%. And the dollar, inverse to that, could move up 19 to 20%. That's just some of the areas that are talked about. So let's talk now about seasonals in the market. We've discussed this before. Commodity markets oftentimes move along a seasonal pattern, and I'll give you this for cotton, soybeans, corn, and wheat. We follow more research centers' seasonal projections. We've done this for probably 20 years. And what they're coming up right now with cotton is a low. They're looking seasonally to be made sometime in the middle of August. Typically what happens is a bounce for a couple of weeks into the end of August, and then they look for a sell-off seasonally into the latter half of November up to around the first part of December. How much could we bounce in this 1 or 2 week period that might be coming up? Maybe 200 to 300 points is possible, and then possibly a sell-off into the 58 to 60 level. November soybeans and corn are the same, typically around the 8th of the month in August. That actually happens to be Saturday, so let's say tomorrow, Friday, or Monday, there's a seasonal tendency to find a low and then a bounce for a couple of weeks. The bounce usually will be somewhere toward the end of August. How much can beans bounce, and then how low can they go? Maybe a 30-cent rally is possible in beans, maybe a 15-cent rally is possible in corn, and then retesting the old lows that were made here a month or two ago. That would be in November soybeans, $8.80 to $9, and then in corn, $3.60 to $3.70 could be possible. And those lows typically take place in, toward the middle of October. Wheat, December wheat usually makes its low in July, but right now we could see, when we see beans and corn rally, we can see a 20-cent rally in wheat and then see maybe a sell-off back toward $4.60 to $4.80. So that's really some of the thoughts on the market, seasonals, some of the projections we're hearing, some of the reasons for the markets moving lower, and then just to review, we'll We're going to look again at the reaction of the markets. The cotton market is down 42 right now at 63.10 with a low of 63.05. The November soybeans down 5.5 at 9.47 3/4 with a low of 9.44 3/4. We've got December corn up 1/4 at 3.83 1/4 with a low of 3.81, a high of 3.85 1/4. We have wheat up 7.5. That market has rallied with the good news on their sales at 5.09 1/2, and it's the highest 5.09 3/4. Rice is down 11. Now the reaction we've seen in the financial markets, we've got the dollar up about 14. Crude oil is down almost 50 cents a barrel. Gold is down $1.30, and silver is down about 20 cents. And then we've got the S&P up 2.1. That's it for our E3 report. Thanks for being with us. We'll talk to you again soon.